Right, so that's what we are keeping an eye out for. Thanks for that, Vinny. Now, FMCG major, and those results, of course, will come out soon. We will tell you exactly what happens on that count. But for the moment, let's ask the experts what they're seeing as far as the second quarter numbers of those Nifty companies that have reported, what they're making of it. What does it tell them about the future next 2 quarters, perhaps? Mahantesh Sabarad is the independent market expert joining us on the show tonight, along with Aditya Shah, the CIO at JST Investments. Great to have you both, gentlemen, and a very happy Diwali. Greetings of the season to you. Aditya, coming to you first. Earnings at these Indian companies that we are talking about, they've really withstood the volatile commodity prices, a major headache really for the energy import dependent country of ours. Now, of the 22 Nifty companies that have announced September quarter numbers so far, as many as 15 of them have produced numbers that have even met or surpassed estimates of analysts. 5, of course, have trailed. But what's your sense of the earnings so far? What have you gleaned from them? What does it tell you?
Good evening. As far as the earnings go, I am very positive. The earnings season has been good thus far. Credit growth, which is the major driver of the economy, is back. All the banks have reported very strong credit growth, which if sustained over a period of next 3 to 4 quarters, will mean a strong traction in the economy. The biggest takeaway is credit is now flowing into the system, which will again translate into 2 to 3 quarters down the line when all the FMCG companies and other domestic facing economy companies will start to do it. So point number 1, credit is flowing very strong. Balance sheets of the bank have really bottomed out in terms of asset quality. And from here on, credit will be pushed into the system to the tune of double-digit 15 to 20% credit growth, what all banks are starting to report. IT sector has not reported any slowdown right now, but I feel that that slowdown has not materialized as of now. And over the next period of next 2 to 3 quarters, we will see the IT sector as well starting to report a slowdown, and a number will start to go down here as well. On the FMCG side of it, we have seen disappointing numbers from Asian Paints, where the volume growth has not been up to the mark. Again, on the FMCG side, volume growth will be soft as inflation continues to drive up prices. But as inflation continues to soften over the next 2 to 3 quarters, we feel that the FMCG results should also start to bottom out from here on. So overall, there's nothing to complain about as such. The positives continue to remain that the bank credit growth is back. IT sector results will be soft, and the FMCG sector will again start to report good numbers over the next 2.
Fair enough. So that's Aditya's view. Mahantesh, I want to ask you if you agree with the positive outlook, because he says there's nothing to complain about so far. Do you see any complaints coming in from the future, from the commentaries that you've heard so far, from various managements, the overall outlook that you glean, at least for the next 2 quarters?
So I think I tend to agree with what Aditya is trying to say. The results do send a message that says that the outlook ahead seems quite robust. None of the companies have really talked about any or raised any flags or talked about of any concerns. Energy prices are a concern. We know that dollar appreciation is a concern for some of the companies. But having said that, the demand recovery that we have seen post-COVID lows has been quite sharp and quite good. Although, collectively, if one were to add the profits posted this year and compare that with what was posted in September last year for those 20-odd companies, then the growth is somewhere in 13% YOY number, which is not too great. Mind you, typically we are accustomed to Nifty companies posting growth upwards of 15%, closer to 20% in that bucket. But this time we are seeing the growth being posted is collectively between 12 to 15%. Much of that can be attributed to the IT companies because they have exhibited slow growth. And obviously the bellwether stock, which is Reliance, which is one of the largest contributor to the EPS for the Nifty, has been very slow off the block thus far. So, and the results that we are likely to see ahead, typically from the pharma companies, from the automobile companies, to some of the cap goods company or infrastructure kind of companies will not be too great in terms of an EPS contribution to the Nifty. So all in all, what this results tell me that we will have a year-on-year growth in the bucket somewhere between 12 to 15% and not really 15 to 20%, but that's still good.
12 to 15% at this point in time where we're talking about a global recession. And Aditya, like Mahantesh pointed out, the energy crisis everyone is concerned about. The strength of the US dollar, also something that's top of mind. How do you see these factors affecting earnings of India Inc. now?
Definitely, these are very challenging set of factors. I have been very vocal with the natural gas prices going up, and a lot of real estate ancillary companies which use natural gas, as well as steel companies have been facing a lot of input pressure because of the natural gas prices that is going on. Again, the dollar appreciation and the rupee depreciation is not good for India as a whole. The current account deficit will start to shoot up starting the June quarter, which because of oil imports, and that is also a negative for the Indian economy. However, what you have to really see is Europe is undergoing a deep recession. US is undergoing a deep recession. Our economy is starting to recover from the 3-year lows that it took starting the IMF crisis and ending with the COVID crisis. So what I feel is that the domestic economy is just starting to recover, and the leading indicator for that is the credit growth. The domestic credit growth is starting to come back. We were at a 50-year credit low. Now we are starting to come back, and we will see the economy starting to recover over the 2 to 3 years. We will not see robust growth of 15 to 20%, but even if we see a growth of 10 to 15%, it will mean that we are outperforming every other country that is out there. And that is why the Nifty is very robust at 10 to 15%, 15% from its 52-week high, whereas we've seen NASDAQ already at a 52-week low. So all in all, India will relatively outperform the rest of the world due to a strong economy going.
Well, many analysts are pointing out that you would really be missing out, and there should be FOMO if you're not going to be invested in the Indian markets. We've seen flight of capital as far as, with the strength of the US dollar, that is partially expected. But if you're not invested in the Indian markets, a lot of analysts are saying, then you would be missing out on a lot because it's really turning out to be a pearl in the ocean of recession right now. Thanks very much, Mahantesh and Aditya, for joining us with your perspective on this. And of course, we'll keep tracking earnings as we go along, but it's looking good enough right now. So far, so good.